Hello Smack Universe, welcome to a brand new episode. We are sure that you're gonna enjoy this one. So subscribe us wherever you find us, like us and comment whatever you see. Enjoy the show.
Yeah, it's very similar. Except that your story is even less sexy than of a sexy startup, if you will.
Welcome to a new episode from the Smack Hospitality Podcast. My name is Florian Montag, and today I sat down with Jan Valentin, founder and partner at ennea Capital Partners. Jan and I spoke about the current market sentiment in the travel sector, how to build a startup in the age of large oligopolies, and what the impacts on travel will be through new technologies like blockchain. Enjoy the show. Jan, you're definitely one of the most connected people in the German travel sector. Let's start the conversation with a quick health check of the industry. How's the market sentiment? How are they doing?
I think it's surprisingly good at this point in time. You had, after the 24th of February, of course, bookings dipped 20 to 40%, we heard from various players. Seems to be picking up. I mean, you can look at it and say we're almost getting used to this crisis, which is in a way very frightening as well. But on the other hand, it is more similar to the macro crisis that we had pre-COVID, where you would have a V-shaped recovery. Almost this one fairly fast, really fairly fast. We have a lot of companies who are printing effectively record numbers in the past couple of days, and who are growing even versus 2019. So I remain very cautiously optimistic that this stays, and obviously that the macro factors on the back of it turn colder and colder every day.
Yeah. So you think that especially through 2 years or 3 years of crisis has just made us more resilient, and the demand for travel is just that big that people just want to get out there again?
It seems to be like that, where people are worn out. I think another very, very big crisis on the last one, but it's not affecting people as much as one might maybe think. I worry about inflation, etc. And effectively, you look at basket sizes becoming bigger and bigger, which is maybe good for the supply side and for hoteliers and for airlines on the one hand. On the other hand, I think are we gonna come back and be Reiseweltmeister again in those 80% range? People going on holidays, I'm not so sure, because you're effectively probably losing a few percentages there in terms of their purchasing power. But yeah, overall, I think people want to travel. And what's also interesting is that even business travel, according to some metrics, business travel is just stepping up week after week after week, a little more. It's far from where it used to be, but yet it is coming back, and it's much higher now than, for example, in January, where airports were really empty.
And is it mainly leisure travel or also business travel? I know myself, I'm back at a few conferences nearly now every week again, and both of us, we saw each other 2 weeks ago in Berlin. Do you also see business travel picking up, or is it mainly driven by leisure?
It's mainly driven by leisure, where you're effectively getting back to 2019 levels and above. And for business travel, what we've been seeing in some statistics is more like 40-50%. But nonetheless, I mean, that is up from around 10, obviously, at one point in time. So it's crawling up. It's not going to come back to 100, in my opinion, but it's crawling back up.
And looking at travel, as you said, inflation is definitely a topic. If it's leisure, then of course the elasticity of demand, especially when consumers have less money. How do you see that affecting, or like, what's your price prediction? Is it something like, are we getting then in a price war because consumers will not have the same budgets as before, or will just people travel more, let's say more planned, so not anymore so many short trips, but more really deciding on 1 or 2 nice holidays per year?
I think we can go full circle here, and I think that the two of us are true believers in cryptocurrencies for the stability versus the fiat money. And I think inflation is very hard to get under control right now. So you have a 10%, maybe more inflation rate for real. And what this does, of course, is disenfranchise the lower segment of society, in particular in terms of income. So suddenly you have a hotel in Mallorca being 1.5 the price of what it used to be, and effectively in your pocket you have less money. So some people are simply not gonna travel as much anymore. If we see prices go up, we've seen that in the US last year already. That's also to do, of course, with limited supply in the end. I mean, if you have travel restrictions and all of that, and suddenly a hotel in Miami costs 500, 600, 800 a night. This is what we see, I think, now as well on some islands in the Mediterranean, where supply has also gone down. You have that demand, and of course kerosene price, etc., going up. So I think you don't have a price war effectively. You have people who can afford it, who book holidays, who actually also book long holidays, 10 days, etc., trying to do this for the first time after COVID. And then you have some segments of society who will not go on holidays anymore, in my opinion.
Okay, yeah. So then there's definitely going to be more kind of camping and what you have already today, which is already booming through COVID, which will definitely be sectors which will then develop even further.
Yeah, that's going to be interesting to see. Funnily enough, I'm actually sitting in the office of Camper Boys here in Munich, who have done a brilliant job in growing their business based on leasing, and they are looking at high growth down the line as well. Yes, so and that's going to be domestic travel, camping, more affordable for sure. On the other hand, there is, I mean, in all the numbers, on average, of course, you see, as I mentioned, I mean, you see people going more abroad again, and that naturally will come at the detriment of domestic travel.
Yeah. Looking back at your career, Jan, I mean, you've spent a lot of years as in the travel sector, and I just checked out also your LinkedIn a couple of days ago again, and saw that kind of your way in was being Reiseredakteur or for the Süddeutsche, so really more from a journalistic point coming into travel. Can you maybe share your story? How did you get into this industry? How did you go from there?
I'm glad you didn't now say it's a roller coaster. No, I think I started off. I wanted to be a journalist, and initially worked in economic part of the newspapers, and also in politics. Of course, it's initially a bit harder to get into being a political writer when you're in your early 20s. So very early on, I got into the travel section of Süddeutsche, and effectively could occupy a pretty good role there, because I was responsible for Africa then, and I was responsible for all the political stories in travel, which Süddeutsche at the time, and I think they still have it. And that's how I started there. And then fairly soon realized when the internet came up, like 3-4 years later, that I didn't just want to write, but do something, and then helped launching Vecte at the time, was the first member of that team. And from there on, pretty much went into the different companies in travel, mostly on the package side of things. So not as much as a hotel guy, of course, including then KAYAK, and then at one point did M&A for KAYAK, strategic development for KAYAK, and realized that this is kind of maybe a natural next step, is to try to do this by myself, much smaller, of course, and go into the venture capital and M&A space.
Yeah, so you always had already a bit of this entrepreneurial mindset, and maybe can you tell me that move then also, like, how come? I mean, you did some strategic and corporate development for KAYAK, but then really deciding, okay, I want to now invest in startups, and I want to make this as my daily business, so to say. What's the driving force behind that for yourself?
Yeah, I actually would say I didn't have that, right? I mean, today looking back, I would say I've had so many great experiences and learned a lot working in companies, and that's certainly helping in this space. But if you do it again, I'd probably start 5 years earlier, trying to be entrepreneurial, because as long as you are working for someone else, effectively you're also working for their pockets. You're not as free. Once you start doing this by yourself, you take much more risk. You probably work harder. You probably work longer as well. But you also, in my opinion, have more fun, because you keep doing it for yourself and then for your employees. And so that's probably what's driving me. I think I've learned more in those 5 years in venture capital and M&A in travel than in the 15 years before working for individual companies, where naturally you have a position where you're executing within a certain frame and you don't get to see as much as I do get to see right now.
And maybe like going back into your mindset and saying, hey, it was a big step. How is it to, let's say, move out of your golden cage? Because I'm sure as a SVP at KAYAK, you're quite comfortable. It's quite secure, the future. But as you said, kind of making that jump of saying, okay, I want to go work for myself and go into investment with this definitely a crowded environment. What was the thought process behind it? And was it an easy move for yourself, or was it also kind of a leap of faith?
No, it was a tough move and a leap of faith, of course, as well. And I would say tough is the wrong word. Sorry. It was actually a fun move, but it's also a tough move. I learned even whilst at KAYAK, I talked a lot to other venture capital companies. I talked to like the Rocket guys. I got to do some projects for them. I then worked with Truro in Hamburg, which is just a brilliant company builder, and with built unicorns all along, including Home2Go, and I think also together. I worked at KAYAK together with the Home2Go founders and with Christian Saller, who then went to Hallspring. So I think that also influenced me already at the time. So kind of going in a similar way, going a similar direction. And then the first half of the year was just super fun. And I was like, yes, you can, travel, right? So now investment. And then I think after half a year, maybe a year, I realized I was very wrong, because it's a totally different industry. I have to learn many, many other things, maybe some more boring things as well in terms of technicalities, et cetera, et cetera. And then it became really hard work. And that is what it is up till today. But I'm really enjoying it. I think the other thing, usually you spend money too fast. So most of my KAYAK money I spent in the first year, where I didn't really know how to invest yet. And I should have waited longer. And the other thing, obviously, you learn when you build your own business is that hiring is super key and working with the right people. And that naturally also takes time. You cannot, in a team of 10 effectively or 5, afford anyone who doesn't work out in the team or who's maybe not steering in the same direction. And I think that was a long learning process. But now I feel very confident where we are.
Which area do you specialize in investment? Is it more early stage? Is it really travel sector itself? Or do you also do some stuff which is agnostic?
We do agnostic stuff. So we tend to say we're not the classical VC. There are lots of VCs out there, and you mentioned it, big VCs, and it's becoming a game which also becomes bigger and bigger. If you look at the last funds of Lakestar and Hallspring, and then in the US, where you under $1 billion fund, you're small. We try to come in before the investors come in, before the VCs come in, and really teach young companies how to grow, how to build a company, how to fundraise, how to tell your story. And then we come in at the very end, and that's specific to the travel space when it comes to M&A, effectively strategic mergers of companies and trade sales. And this is where obviously the travel experience feeds in a lot. We do a few deals outside of travel as well on the M&A side, but mostly that is travel. And for the early stage, it almost really doesn't matter. I mean, there are a few sectors which we avoid, like health. Actually, fintech, funnily enough, we can talk about blockchain, but we feel that there are some sectors which just have a different dynamic. I mean, if you look at the health sector, you have a lot of public funding, etc. We're not very, very good at that, but there we're rather agnostic, actually.
And with your team, you mentioned you're 4 or 5 people in the team. Are they all more with a VC background? Is it also more of a travel background like yourself? Or how have you brought in together like this little, as you said, each person needs to bring their value, like this little dream team?
It's a mix. Kassian and I certainly are travel background. Kassian also quite known in hospitality scene, sitting in London. Simon has a VC background. Johanna also has a VC / M&A background. Then you have Sven, who is also more on the finance and VC side of things. And then again, you have Tobias, who is a full entrepreneur through and through out of the travel industry. I have to say that the latter two, Tobias and Sven, that's a new entity we just founded, which is like a new investment arm with I'm very proud to have these guys on board. Tobias founded V-Tours and then sold it. So the first dynamic tour operator in Germany, and Sven has a long career also as a professor of finance, and that certainly helps us in terms of the gravitas we bring to the table. So yeah, we have that mix. Since you're asking, I'm going through the people we have that mix now. I think you can always get better at execution, and meaning building DCF finance models and building pitch decks as well, which I do a lot and which I have fun with. But certainly you could find someone who does nothing else all day. But that only comes with growth.
Yeah. No, and I mean, I know Cassian also very well, who was an advisor, of course, to Hotel Hero back in the day, so to say. But and a great person and a lot of knowledge. But
we haven't lost the fun we had at KAYAK, so that's also good.
Exactly. That's really great. But as I'm interested about it because of course you always talk about like VCs investing in new startups, and there you think about building a new startup and how difficult it is, but also building a new VC, of course, and a fund. It's kind of like building a startup because you need to raise funds from investors and tell them, hey, we have a better strategy to identify the next kind of unicorns in the market, right?
Yeah, it's very similar. Except that your story is even less sexy than of a sexy startup, if you will, because you have a portfolio. You have talking about multiples and probabilities, and you're talking about tank rate as well. That you're going to lose so and so many startups in the beginning. You're not just telling one colorful story around holiday homes or camping or whatever. It's more more abstract, but and other than that, it's fairly similar. Yeah. And the first investor is always key. We got a term sheet on the table today from a lead investor, so we're quite happy for a new fund. And yet, it's the same. It's the same process, same challenges that you face. Yeah.
Yeah, definitely. No, that's great. It's great to hear. But I'm sure one of the questions, especially looking at travel and distribution, and like you have all of the big players like the GAFAs, but also Booking, etc., who are really dominating the space. How is it to build a startup in this world?
Well, I think first of all you have to be careful. And when you see in a deck that I'm going to be the Google of something, then you better ask yourself if Google is not going to be the Google of something. You still see that in decks, right? Someone writing, I'm going to be the Google of X, or I'm going to be the Facebook of Z. And you know that this is a deck you don't even want to touch, you don't want to get into. Because effectively Google is always going to be stronger at executing that when it comes to pure data plays. And if you look at the stacks in terms of both applications for your private life, but applications for professional life, I think that those truly big guys, especially Google, Apple to some extent, I'm not so sure about Facebook, are of course taking a lot of share in terms of the entire value chain, taking a lot away, and that is their clear goal as well. And we know it. I mean, you have all these. Obviously, you have all these court cases and European Union cases, etc., against Google, and then also against Booking. Where obviously you also have a kind of symbiotic relationship between the big guys again, where Google tries to maximize their profit through Booking maximizing their profit. Does it mean that innovation is stuck? I don't think so. I think quite to the contrary. I actually believe that the time where you would say that it is going to be very, very hard to gain market share, or put differently, I think the time where these big players, the dominant players, are growing market share ever and ever, year by year, is coming to an end. And that has to do with the lack of innovation within these players, my opinion. You don't see a lot of, they have great products. And if we talk specifically about Booking, yes, it's a great platform. But then looking back 5 years, when we were at Booking 6 years, we sat in, I think it was in Bangkok at the time. And the big question was, could we be the Amazon of services? Could we go way beyond that hotel and yes, some flights, some package. Could we be much, much more? And I think Booking, based on the approach in terms of essentially being very EBITDA focused, which I have to be being public, they never went into being very innovative and executing on that idea of being the fifth horseman, as they called it. And at the same time, they've not been super successful in terms of small acquisitions. They've always been successful with big acquisitions. eTravelize, certainly a good deal. I'm sure KAYAK was a good deal. At the end, maybe even Open Table, obviously Agoda. But all of these were companies that were already ready. So they bought a company, 20% EBITDA margin, whatever. And the true innovation on the back of it in terms of executing, for example, in terms of implementing blockchain technologies on various levels, I don't see that coming, for example, from Booking as much. Now we can talk about Travala and we can talk about their investments there, and maybe yes, but I think in terms of process optimization, in terms of making the entire journey more seamless, I'm not sure that Booking is eventually unbreakable. And for example, you had this startup in the Netherlands, Origin, I think is the name, where a lot of VC money went into right now, who are promising that end-to-end full customer journey process. And for Booking, this always remains an issue, of course, in terms of the margins as well. So selling a flight is just not very lucrative, and you're dilutive in terms of your EBITDA multiple, etc. So I think that there are, based on new technologies, based on an API first world, based on strong execution, there are plays that are very, very valid in travel down the line, and that they will also become acquisition targets for the big players then again, which is also, of course, what you want if you don't IPO. You want to be acquired. And I think that Booking will have to become more active in that space as well in terms of acquisition. The other element, I think, is that some of the heritage players, if you will, in the OTA space, etc., we haven't seen a whole lot of movement in the past 4 or 5 years, even in terms of mergers. Very little has happened. And I think that better execution and better usability is going to have be the basis of building the next unicorns, very obviously, as Airbnb did 10 years ago.
Yeah, no, for sure. I think Airbnb is an amazing example of how they found their niche sector and then just grew through that and built something amazing, which may be an opportunity which normally a Booking should have kind of covered already at that time, or at least after a few years of Airbnb and maybe being a bit slow in kind of going into it.
Yeah. And the same, I think, applies to Google. I think maybe that one last comment to Google and Facebook, etc. As long as you don't really cover the end-to-end journey in terms of full custom experience.
What is, like, maybe for our listeners also, could you just quickly describe what an end-to-end journey means?
I mean a truly seamless experience for the user, which effectively, I think, takes the thinking out of the user's head in terms of travel. And I think an end-to-end, I mean, in a sense, other sectors are much more advanced there because they're simpler. If you're shopping on Amazon will pretty much tell you what to do. Right? I mean, if you're using it a lot, then Amazon knows what you've done. It knows the discounts. It knows where you're sitting and will discount accordingly, etc. Travel is much more difficult, much more complex, and that's why it's been one of the first industries to digitalize with the GDSs, etc. But now it is kind of the feeling is it's like a decade behind. But if for me, end to end means pretty much that the app knows you well enough in order to execute the booking and assist you during the journey. And that's been a claim we had at KAYAK, for example. We had that claim 8-9 years ago. Of course, we couldn't fulfill on the promise because it is hard. But I think it also means end to end. Probably also means a mix of human and human assistance and computer-led assistance. And this is, I think, where some new players, when they use this kind of mix smartly, can provide a better service than Google ever will, because they will not have this human assisted service on the back of what they're doing there.
Yeah. And looking at now, like the new super app, for example, Hopper. Um, how do you see them in the market? Because they are very much in that kind of booking, travel, accommodation space. But they are, yeah. What potential do you see for them? Do you just think that they're maybe a bit over glorified at the moment, or do you think they're really onto something and really changing that market?
I think for now they're over glorified, but I think they're taking the right measures. So for a long time they didn't actually do any outside investments and pretty much said we can do all of this by ourselves. But now they've started to look smartly into the sector and see where they can add on and provide a better service. So they're probably they're the ones most advanced in terms of what I just described as an end-to-end journey.
And I mean, you mentioned already blockchain a few times, and both of us have been speaking about blockchain in travel also quite a bit. Do you think from blockchain or through blockchain technology, this is where we can expect most disruption in the travel sector? Or do you think there's another technology or another space before that?
I think it's probably what you would call AI on the highest level that has the biggest impact on that end-to-end journey vision that I described, higher than blockchain for sure. Although blockchain can and will become a part of it. I mean, having seamless payment process, for example, having loyalty system on your phone, which tracks you pretty much like your health app tracks you, and then across the board. I think that has an impact. But I think in terms of the biggest challenges that customers or travelers face today, it is still finding the right accommodation, finding the right holiday. Then it is, in my opinion, it's picking up a rental car. That's horrific. That probably won't be solved by technology only, but blockchain will have an impact there. Of course, identification, etc., making all of that more seamless. But it's not what most travelers most of the time deal with as a problem. I think the biggest challenge is looking around for 10 days or for 10 hours net or longer for the right leisure, especially leisure hotel on an island. And this is where sophisticated search technology and a better understanding of the user, sometimes very simplistically through heuristics. Actually, you don't need a lot of AI or machine learning for that or whatever. It's not even AI in that case, but certainly having more user signals and more signals in terms of the objects is more relevant there in order to fix that problem than blockchain.
Mm-hmm. But do you think, because of course for AI you need to have access to a lot of data, and I see at least in the hotel industry itself, it's often a problem is to be able to access all of this data and standardize it and to make it comprehensive. Do you see in the more general travel sector space that this is not a challenge, or and therefore you maybe have it easier to use more and more artificial intelligence? Or do you think also access to data and data standardization is also a big issue?
Yeah, it's the basis of it. And maybe we shouldn't, maybe AI is even the wrong word. Maybe we should talk about natural intelligence first when a user enters a website, and asking the right questions to that user. And give an example, on many websites, you cannot even define leisure travel websites. You still cannot define the right time for when you want to go. This is when you go into a travel office, probably they're going to ask a smarter question. And we're working with one company in Israel right now. They're called Holiday Hero, just rebranding to that, and do a brilliant job just in the small Israeli market. 10 million in net revenue on a yearly basis, which is a lot for that small market. And they are they're leading through the journey in a way that is just asking the right question at the right time all the time, on simple travel as well. You have this for complex travel. You have tour lane, etc., and then you still get to an agent. But I think a seamless user journey that, of course, picks up signals from the user on the way, is already very helpful. And you have BD4 Travel, for example, who has done that very well for some package sites and for some airline sites. So you don't need to be Google and Facebook in order to understand a lot about the user while he's on your site, and that is then effectively a mix of normal and a bit of artificial intelligence. I think that is already a leap ahead.
And you mentioned already before things to not see, to not look at, or when you see them in a pitch deck, to throw it out directly, like being the next Google or the next Facebook. In the travel sector, and the startups, you look at what are the things you really look for in the pitch deck, and or like the metrics or the area where you say, hey, this is where I kind of it clicks for me.
Yeah, I mean, there are even statistics out there, and we're teaching that the three things basically that you look at in a pitch deck is the team. You want to know the team, you're investing into that team. The earlier, of course, the more you look at the team, the earlier stage it is. Second is the product market fit, and is this compelling? Product market, we also call it product market and market product fit. Because the most brilliant, and then the third slide you look at obviously is the financial plan, and how does this look like, and is the hockey stick too steep or is it not steep enough? Investors want to be betrayed, so they want to see a hockey stick. They know it won't happen that way, but they want to see it. But of course, it shouldn't be too steep. Effectively, then comes down, of course, there to unit economics. Do you believe in the scalability of this? This is all that VC is really about. Those are the three most important slides.
Mm-hmm. Yeah, I think definitely in an early stage, it's always difficult to show that hockey stick and find the right, let's say, steepness of it, because sometimes it can be, you're still very early, and therefore the approximations and the timeline can always be a bit difficult to have. I mean,
no, of course, but you need to have at least need to have an idea of what problem are you solving, and this is what product market product fit. You still get a lot of decks with like actually a brilliant team and brilliant tech, but not solving a problem out there. We just talked about it. I mean, there are certain topics that if you solve them, you have better unit economics or you're creating unique product. But if you just have an idea that is not solving a problem out there that travelers actually think they have, they may have it, but they don't feel they have it, then you're not going to make any money. And we've invested in quite a lot of companies with exactly that, because they were fancy and things looked good. But at the end, it didn't facilitate booking or travel, and then you're not going to grow.
Yeah. Looking at, for example, companies, especially with the topic of decentralization in the future, and breaking and connecting end-to-end users via blockchain technology, having a real kind of value proposition, at least, or vision of disrupting the marketplace model and really being able to break down these oligopolies. What's your perception to this? Do you think this will happen in travel? How likely? What's the timeline? What's your prediction and your take also on that?
I mean, the internet today is not what people thought it would be like 20 years back, right? Full democracy and effectively some of the promises, which are very similar to blockchain in a way today, where you're thinking you're more democratic and you're cutting out middlemen. To some extent, it's happening, right? I mean, we have a lot of models today where you don't need the middleman anymore, because you have apps that cut out the middleman. That again has led to concentration of power. Think of Google Maps or Uber effectively aggregating all of that supply, and you don't need the local taxi booths anymore. In terms of blockchain, I think that the technology is being woven into the industry more and more. That's number one. So on many levels, it's just coming. It's being integrated almost like a new piece of code, and that's because what the basic that it is built on, namely the internet, is already there. So it can go more incremental in that sense. On the other hand, if you look at adoption of and if you look at network effects in blockchain, it's actually faster than the internet, which also comes from the fact that the internet is already there and it's becoming much more easy, of course, through an app, etc., to scale. So we're seeing the fastest innovation probably in the history of mankind with blockchain, and it's still very, very early. So by most accounts, you're looking at 2001. Maybe 2000 is an analogy to the internet. So then the short answer to this is: do we know where in 2042 the blockchain might be? Of course not, because we got it wrong in 2000, where the internet would be in 2022. Fundamentally, I think there is a big divide between the blockchain industry today and the travel industry. So most people in travel have zero idea about blockchain, like nada, and vice versa. And that, of course, bridging that, and that leads to applications being built on the blockchain that nobody really uses or needs, and that get no scale. And that needs to be bridged. Now, there are certain initiatives, of course, in the market to build like consortium blockchains, for example, tying different players together, tokenize that, build a network. It doesn't lead to democratization in the sense that what would it even mean for travel? Would it mean that every traveler effectively becomes a travel agent, possibly? Yeah, and that commission is taken away from a booking.com. There have been approaches to that as well. I don't really see that happening, because it then also depends on usability, and that again depends on scale. So I don't think, much like the internet, I just don't think that we will see effectively middlemen being completely cut out, because middlemen also live off their capacity to just provide a better user experience than the average guy in the street or the average player in the market. Will we see shifts in terms of where money flows? Yes, for sure, and we will see big winners, and maybe even bigger winners than with the internet, and we will see people losing as well. It's also what then happens, of course. But overall, I think it is the progress is much slower than we thought maybe 5 years ago. I mean, Winding Tree came up in 2017. It's a long time, 5 years, and no one knows Winding Tree. Amadeus is still there, just the same way. Nothing changed now for 2 years. Doing some great stuff on the tech side, and Amadeus has a very strong, very strong reason to be. So it will not be as simple as seeing those big players disappear, and suddenly you have all these decentralized networks which aggregate all the data, and everyone collects loyalty points, and the price is auto-adjusting in the interest of all market participants, etc. I think maybe in 2050, but hard to foresee.
Yeah, I think definitely, and in 2017, we definitely had also the little boom or like the ICO boom, of course, where everything, every industry was, if you have blockchain now, you're going to disrupt the market in a few months, even maximum years. And of course, the reality came in. You need to first build products, and as you say, also there needs to be closer connection between the innovators working on these new technologies and actually also the people who understand the market structures, and bringing that together to then actually build a problem or build a solution which can disrupt the whole market. Because it's not a Winding Tree, for example, which I think they're working on it and developing it a lot every day, but they're not. The business model doesn't work with just a tiny bit of the market. For them, it really only works if they are the market maker, so to say, and that, of course, is not an easy challenge to go for. But of course, if you achieve it over years, then the reward is even higher. But
And now versus 2017, the base technology I think is there, right? I mean, Solana is faster than Visa. I think if you look at layer 2 on a Bitcoin network, it's faster than Visa in terms of processing transactions. So that basic issue that blockchain simply had in 2017, much as the internet had it in 2000 or in 1998, is resolved.
And you can see it also in the fintech area already quite a bit. I mean, I'm a big Ethereum fan, and especially a lot of projects which are built on there, which give the end user suddenly, especially in the DeFi space, having access to certain services which you would not have easily or only through the big banks. So you can see that the first real use cases are coming, the technology is there, but of course also the volatility of the markets are still very strong, with a lot of people really just investing there just for a quick pump. So I think it also there it's still a, let's say, you need patience. It's until this will really disrupt the different markets, and also become more kind of not just innovators space, but also more, let's say, early adopters to mass market.
Yeah, yeah, and that needs a lot of people to really understand it. I think there's maybe again some parallel to the internet. I mean, when did the internet fundamentally change our lives? It wasn't probably Web 1.0 when you had suddenly some newspapers online, and it looked like newspapers still, but it was with well, mobile internet on the one hand, and then it was with the social web, and with people actually interacting in the internet, and most people getting it and understanding it. And blockchain is probably much more complex to understand on the base level. But the more people we have contributing to the ecosystem, using it, obviously, then that will accelerate, and then it can change societies fundamentally, as the internet has.
And for these big technologies, I know you already mentioned at the beginning with Booking having difficulty to do the big innovation, especially as you're a public traded company. Do you think the innovation will come from within, big players adopting new technologies like blockchain, or really improve their offering? Or is it going to be small players, new startups who will disrupt the market?
I think the interesting thing about blockchain companies, for the most part, and even if you talk about the big networks, maybe not Ethereum, but how many developers does work on Ethereum today globally? 200,000 maybe?
I'm not exactly sure of the
Maybe
numbers.
that ballpark. I think Solana core is like 100. I think. Now, or if you look at WeChain, or at some others which are valued in the unicorn, on the unicorn level, what I want to say is that you have a lot of you have very high valuations for the size of those companies, effectively. On the other hand, it also means that maybe you can grow a team of 30 in a company and do a similar thing. So I wouldn't rule that out. And you see a lot of companies, obviously, in the fintech space and in all spaces, Walmart, et cetera, hiring blockchain people left and right, and effectively, people leaving the GAFAs in order to join other companies who suddenly build their blockchain arm. So I think you can be probably very efficient, because you're building up on layer and layer, and you're building maybe on Ethereum and other layers. So that is, of course, the whole principle of blockchain. And that would, in my opinion, not rule out that in the end, innovation in terms of the user interface, etc., in terms of what then generates real money and value, may come from within the big travel companies as well. It's not too hard.
Yeah, definitely. Jan, thank you so much. We're already coming to an end. It's been a real pleasure to chatting with you. And maybe closing up our chat with last little prediction. I like asking you and looking into the glass ball. Where do you see the travel tech space going in the next 5 years? Do you think, is there anything new coming, or are we going to continue on the same path as a new crisis changing everything? I don't know.
I mean, it's two different questions, I guess, right? On the tech side, one always overestimates the short-term effect. So if I look 5 years ahead, probably it's not that different, honestly. We have a little bit more end-to-end. We have a few hotel chains and other direct providers who just really kill it, have great user experience, have 60-80% direct share in terms of at scale. But other than that, the user experience is going to be fairly much the same. And on the macro, let's just hope that the worst is over and we're entering better times. I mean, those 20 so far haven't been as as good as the beginning of the 20s in the last century. So maybe the better half is coming. Although there's some similarities, of course. But I think on the macro level, yes, climate change, all of these macro challenges on the political side are not. We're just not seeing a lot of tailwind. In that regard, but that won't affect the progress of technology. Maybe to the contrary. Maybe any crisis probably accelerates progress. Again, 5 years from now, other than macro, probably fairly similar world.
Amazing. Jan, thank you so much for all the insights and the chat. And I wish you a great day. And for all the listeners, thank you so much for tuning in.
Thank you, Flo. Thanks. Ciao.
That's it for this episode, everybody. Thank you for tuning in. Don't forget to share your thoughts on this episode and everything else that is going on at SMAC with us by checking out our website at smack.media or connect with us on LinkedIn, YouTube, or Instagram. We'll see you next time.
Guys, we hope you enjoyed this episode. We're so glad that you were here, and we hope that you give us a lot of love, a lot of comments, and everything that you have on your minds. Follow us wherever you find us, and stay tuned for the next one. See you.